Hello guys, this is FairBinaryOptions.com. It is, as you can see, 9th of February and it is Sunday. We are preparing for the trading week to come, and I might say that we are looking for bullish conditions on the euro US dollar, and therefore we like to buy call options. What would be the expiration date? Well, the expiration date definitely is going to be end of week next week, so I'm talking about next Friday. The reason for that being that we still seem to be in a contracting triangle here on the euro US dollar, and probably, but not necessarily, but probably we still have, let's say, a leg of a contracting triangle to be done. Now if you zoom out a bit, this is the 1 hour chart on the euro US dollar, and our contracting triangle, let me see if I can make it a bit like this. Okay, this is maximum, and our triangle most likely goes something like this. So it goes from the top here in the 1 and 38. Let me try a line. So from this one here to here, so this to be the first leg of a triangle, I would say wave A. Let me make it something like this. Let's change the color. I would say that we have a B wave that goes to the upside, but not here nor here, but it will go most likely here. So A and the B wave there, and then of course we have the C wave to the upside, a C wave, sorry, to the downside that was done here, A, B, C, and now the D wave to the upside. And the big question is, of course, as you can see, is the D wave already completed? Normally I would say no. So I would say that we still need something like a D wave, something like this. So to have A, B, C, D, and then an E wave here. So I would say that what we have so far is only in the middle of the D wave to the upside, and most likely another wave something like this into which was not to exceed these highs. Okay, so careful about these highs. That would be actually the invalidation area. So if you see price breaking above this 137.76 area, that would mean that our pattern that we are looking for is not a contracting triangle, but most likely a flat with a C wave failure, and that is as bullish as this triangle is. What I will look into next week is for price to build, I don't know, to make a consolidation area to give us some nice entry levels for the upside, but in the end to break, or to end the week higher, and the week should end around, let's say, the previous high, somewhere around here. Definitely challenging the 137 area. You might say, well, it is already 136.30. What can change? Well, nothing in this bullish environment. But as you can see, the euro, the ECB cut the interest rate. Then was all this bearish talk. The tapering in the United States failed to bring the US dollar lower. So why selling the pair, or why buying put options? Well, we don't want to buy put options based on this triangle. This triangle is poised in the end to break to the upside, and therefore let's keep the momentum. Normally the triangle should end around 50% area when compared with the first leg of a triangle, or the longest leg of a triangle, so somewhere around here. I would say 36, 13, 15 or 17, something like that. So if you take this line here, that would be the logical thing to, or the area to watch for the triangle to end. So in the end, this being the D wave, then look for an E wave to come around here, and then price aggressively breaking higher. Now, a break higher for the euro US dollar would mean that the eventual trend line, the B2D trend line, which is not done yet, okay, so the eventual trend line to be broken to the upside. But that's one, let's say there is one trick here, and this is a bit of let's say unknown for the usual Elliott Waves trader that is looking at price, the B2D trend line to come. So let's say that this is a B and you're looking for a D wave to come to the upside. It is mandatory not to be broken by any part of the previous A or C trend line. So if you draw the B2D trend line here, you are seeing that you have a spike here. This should not happen. Well, if this should not happen, What does it mean? It means that you have a target for the upside, or if you are long, or if you're buying call options. It means that this line, it is impossible to have, let's say, a smaller angle than this one here. This is maximum to come, and minimum will be something like this. So not to be touched by any part. So this, you need to have an empty space here. Therefore, I would say that if this is, let me try to bring it again. So if this is a B2D trend line, or a potential B2D trend line, I would say that minimum to come in the euro US dollar and probably the coming week will be this area 137.10, and therefore we like to buy call options. So buying call options, but again, end of week expiration date, we want to avoid volatility on a, let's say, boring Monday or panic Tuesday, or whatever the market is going to play with traders. We want to be disciplined. So buying call options with end of week expiration date, starting with Monday, or with this Monday, with the opening prices, I don't mind to buy these higher values, as normally our analysis should be correct. This is technical analysis confirmed a bit by fundamentals. So thank you very much for being here. This is fairbinaryoptions.com, and all this analysis and recommendations are possible due to the help of our sponsor, Lion Knife. Bye bye.